Welcome back. We are now hearing about a crypto whale manipulation shorting fiasco, and we're going to be discussing whether this was a potential takedown of Hyperliquid in what appeared to be, at least according to many, an FTX 2.0 style attack. Now, we're going to be discussing this along with many other topics, including GameStop raising $1.3 billion in convertible notes to purchase Bitcoin, and they are now officially following the MicroStrategy Bitcoin purchasing strategy by taking out debt to purchase Bitcoin at essentially all-time record highs. And we're going to be discussing that along with some other topics, including what is going on in the US with the regulatory environment, with hints about where the regulatory environment is going. But we're going to be starting right here with the whale shorting fiasco. This is the Cryptoviser podcast, so make sure you guys are subscribed to the channel. Give the video a free thumbs up. If you want to help support the channel financially, you can click the join button down below to learn how you can become a channel member for not that much per month. We have a few different tiers, and you can also use the super chats down in the comments. Thanks to everybody who does support. So in the kind of spillover from the meme coin fiasco back in January and December, we are now seeing even more going on here. And this is really not good, because what we saw in 2022 was we saw, Celsius, BlockFi, a lot of different, Terra Luna, a lot of different kind of over leveraged protocols or companies kind of collapsing at the beginning of the year. And then everything was kind of held over until the end of the year when FTX finally did collapse effectively. And a lot of people blame the Binance exchange for dumping their FTT token, which was the FTX token, onto the market. And FTX was using this in highly leveraged fashion to effectively print money for themselves to go trade the rest of the market. But once the market starts to turn the other way, you get cascading liquidations, and effectively that's how they went bankrupt. And we are now hearing from BitGet's CEO and basically a lot of people in the crypto ecosystem slamming Hyperliquid's handling of the suspicious incident involving this so-called jelly meme coin token. So let's kind of break it down, because this is important to understand. Even if you don't really care what happened with the hack, like I really didn't care, but I saw there's potential spillover, number one, from the meme coin fiasco that happened in December and January, but even more spillover can occur afterwards, right? How many other companies or protocols are built similarly or have potentially the same kind of mechanics and can potentially face the same fate or situation that we're seeing here? So we're going to break it all down. We're going to talk about both sides, about some of the criticisms, about some of the theories that are going on, and kind of where this goes. And then we're going to get into the other crypto news, which is important. But guys, this potentially could affect the market either into a more bearish state or into a more bullish state. In the short, medium, or long term, we don't even know. We have to see how this all affects the rest of the market and the rest of the protocols. So let's break this all down. So Gary Chen, the CEO of crypto exchange BitGet, criticized Hyperliquid's handling of a March 26 incident on its perpetual exchange, saying that it put the network at risk of becoming FTX 2.0. Hyperliquid is a blockchain network specializing in trading, and they said that they delisted the perpetual futures contracts for the Jelly token and would reimburse users after identifying evidence of suspicious market activity tied to those instruments. Now, if you've been following my videos since the FTX collapse, you know what we talked about. In my view, in my opinion, FTX was manipulating pretty much the entire crypto market, but specifically coins that they did not have listed on their exchange, the likes of Cardano, the likes of Litecoin, and Internet Computer Protocol. These are three perfect examples, and you can go look at the chart from the 2020-2021 cycle and look at how they performed compared to their counterparts in similar kind of technological categories. But if you see Cardano, it did from the bottom of the last market to the top of the last market do a 100x from about 3 cents to $3.10. But we also found out that effectively the largest crypto exchange in the world, FTX, right? The Sam Bankman, the smartest guy on earth, they didn't have Cardano listed on their exchange. And by the way, they didn't have Internet Computer listed on their exchange, and they didn't have Litecoin, the third largest crypto at the time, listed on their exchange. They didn't have it. And so when FTX collapsed, you start to ask the question, like, why did they not have these listed on their exchange? Well, Sam would argue that they did. They had it in their perpetual futures contracts, which are essentially derivatives on derivatives. And you can, what we've talked about many times in this channel is some of these derivatives, especially in illiquid markets, can affect the price of the underlying asset. The underlying asset is supposed to set the price, set the tone, and then those derivatives are supposed to derive their value from that underlying asset. But the markets are flipped. And so what we saw was FTX had Cardano perpetual futures listed, but they didn't have the actual coin listed. And they were able to do this to suppress the price of ADA, suppress the ecosystem of Cardano, suppress the development of Cardano in certain ways by suppressing the price, right? And what did they do? They pumped the price of FTT token and Solana coin. And so I question, and I did question at the time, how much higher would have Cardano have gone? Because some of my price predictions were $10, $15, $20 at the time. And I really did believe these could have happened. But what happened was FTX was sucking all the liquidity into Solana and FTT token and the coins that they liked, right? All of those Solana-based coins. And they were in the perpetual futures market, negatively affecting and suppressing the price of Cardano. And I haven't seen any argument or presentation to show me that the opposite is actually true, which means that FTX was manipulating the price of many of these coins, including Cardano, including Internet Computer, and including Litecoin. I mean, Internet Computer is the perfect example. Just go look at when it launched at the price. That was all FTX, right? And so Cardano was affected. And so this is why perpetual futures markets are very interesting to me, because this, in my view, is where manipulation of the markets are occurring. I mean, it's very clear here. And meanwhile, US citizens can't even participate in those markets. So you have overseas people affecting the markets that we are trading here in the United States, and you have no say and no ability to participate in that market. So this decision to delist Jelly was reached by consensus among Hyperliquid's relatively small number of validators, flagged existing concerns about the popular network's perceived centralization. The CEO of BitGet said, despite presenting itself as an innovative decentralized exchange with a bold vision, Hyperliquid operates more like an offshore centralized exchange. Hyperliquid may be on track to become FTX 2.0. Now, let's be clear. Some of the DEXs are truly decentralized, but there are centralized abilities in there, right? Otherwise, how do they update the network? How do they fix any bugs that occur, right? So there is definitely some level of decentralization, but delisting the coin because they see suspicious market activity. Well, what kind of suspicious market activity are we looking at? Well, let's understand why Hyperliquid said that they delisted Jelly meme coin amid this whale fiasco. So essentially, Hyperliquid suffered its second whale manipulation event in 2 weeks as a user shorted Solana meme coin Jelly on the DEX, forcing the protocol to assume hefty losses shortly thereafter. And by the way, remember what I said. Everything on Solana right now is just meme coins. No other technology that is developed. There's no other products that are being released. It's just meme coins. And the other thing is, all this meme coin nonsense is all happening on Solana. Solana effectively was the proxy for FTX last cycle, took down crypto, and potentially is going to do it again. And everybody loves Solana. Everybody loves Solana, even though the protocol, it can literally take down the rest of crypto, as we are seeing from this incident, number one. Number two, the price is down 50% from its all-time record high. And, all that they've done in terms of production over the last few years is meme coins. So yeah, it's the best protocol in the world, guys. Anyway, this wallet opened a short position on Jelly while the whale dumped the meme coin on DEXs. This crashed the token's price and forced Hyperliquid's vault to take over the initial short position. The newly created wallet then longed the token, meaning bought the token or bet that it was going to go higher. This strategy exacerbated Hyperliquid Protocol's vault and unrealized losses to about $12 million. Effectively, he was placing trades and then going in the market and basically betting the other or basically going in the market. So if he shorted, he would go and start selling, right, dumping on the market. So the price went down. So the short made a lot of money. And then they longed it and then bought, and then that pushed the price up, right? So this is manipulation, obviously, in the market. While Hyperliquid raced to contain the situation, some users on social media suggested centralized exchanges that compete with Hyperliquid should list Jelly Jelly futures to incentivize more trading and possibly cripple Hyperliquid. This There was speculation that if the meme coin's price hit a certain level, it could wipe out the HLP vault. This is essentially, right, these exchanges typically operate on small moves. When you have these big moves, especially in a derivative exchange, right, then when it comes to execution of these trades, sometimes this could cause major liquidity issues and potentially complete collapses of the protocol, meaning that the it's probably not going to get paid out. And then what happens is there's a loss of trust, and then everything starts to crater. Anyway, within an hour or so from this whole situation occurring, Binance and OKX, two major exchanges, listed perpetual futures for Jelly Jelly. However, at the same time, Hyperliquid halted Jelly Jelly trading and froze the contract after evidence of suspicious market activity and a validator set convened to vote to delist Jelly Perps. So think about this, right? They see manipulation occurring on Hyperliquid. Hyperliquid pauses everything. Then OKX and Binance list perpetual futures for Jelly Jelly. Again, same thing that we saw back happen. This is just a little bit more blatant than what we saw happening in 2020 and 2021 and 2022 by FTX. So basically, Hyperliquid's native token dropped as much as 22% during the incident. Jelly Jelly is a meme coin created by the co-founder of Venmo and early Venmo investors. They said, as a self-diagnosed chaotic neutral whose hero is Jack Sparrow, I highly approve this insane crypto war playing out between degens, whales, and crypto trading platforms using Jelly Jelly, even if I have nothing to do with it and only half understand it, according to one of the founders. This is the second whale manipulation event on Hyperliquid in March. In the beginning of March, a whale built a $306 million Ether long position to profit $1.86 million after withdrawing 17 million USDC. Rumors at the time said the protocol was exploited, but their team said that the trading engine could not accommodate the position size. So again, a lot of this is a little bit confusing, to be honest. Like, even somebody who follows the market on a regular basis, it's still very confusing. And so if you're not fully grasping what we're going over, like, that's totally fine. Like, as long as you understand the gist of this, right? Number one, derivative market, and this is basically margin trading, right? You're not holding the underlying asset. You're not touching the underlying asset. All that's being done is basically just placing a bet, right? And so when you place a bet, who usually wins? The casino, right? I mean, this just is what it is. I mean, why would a casino have gambling if they're not going to be the winners? That's a good question. But anyway, this is really, for me, kind of the indicators that we're getting close to the I think the next pump in the markets is it, right? And this pump may last a few months, it may last a few weeks, I don't know, but we're starting to see the collapses occurring, right? There's been so many things that have occurred so far this year. I mean, I can't even remember everything. We had the Solana meme coin situation. We had the Argentina meme coin situation. We had the Haktua. That was really the beginning of the meme coin situation. But there's so many other things that have occurred that it is very similar to the NFT situation back in 2021, where people were paying $3-4 million for a monkey JPEG and saying, "Oh, this is going to change the world," and it didn't, and it won't. Right? Yes, it may do things, but these are the difference between Bitcoin and Ethereum and some other cryptos, right? I'm not going to go through every single one, but maybe the top 50 cryptos. The difference between these and meme coins is that these have actual value use cases. There's building actually going on in them. Companies around the world are using them as backend integrations for their payment systems or for their decentralized finance ecosystem. I think this is going to continue to grow. NFTs, no real utility from the JPEG situation. Obviously, you can use it for authentication, which they do. I mean, VeChain does this. I believe Cardano does this with Wine. Some other chains, I believe, do this as well. So that you can do it, but like just from a situation like people trading these meme coins for like millions and millions of dollars. I mean, I just go back to the Argentina meme coin fiasco. The team that created it extracted $100 million in like the first day. Extracted, like meaning they have the cash. Well, they have the crypto, but they can convert the crypto to cash. $100 million worth. Like, where was like who's putting all this money into all this like side trading bets on meme coins, right? Like, this is where the fundamentals are. And so what I think is going to happen, and this is what we've been talking about, and we're going to get into a little bit more because there is more to make you kind of understand that this is potentially going to have spillover into other cryptos, under other over leveraged bets. But these are the signs that as people lose trust or are not really sure about this market because of all of this nonsense going on in non-fundamental tokens and blockchains, money is going to start flowing to the fundamentals, right? Wall Street is not paying attention to jelly jelly. Wall Street is not really even paying attention to Solana. They're really just paying attention to Bitcoin and Ethereum and maybe a few other coins here. So when the money, the speculative money starts to flow out, which I already think it's been doing. This is like, I think, last kind of gasps at and you can see it, right? One trade was able to manipulate the whole market, and jelly is probably very thinly traded to begin with. But either way, like we're not seeing people trading these things anymore. This is also why you see Solana volume down, transaction volume down, revenue down, prices down. This is across the board in crypto, but the big money is going to start to flow right back to the fundamentals. And this is why I think that we are going to see pumps, massive pumps into these highly fundamental cryptos. And when that happens, it's going to be a parabolic move, or as Raoul Pal says, the banana zone, where we effectively go parabolically straight up. But guys, that is just a speculative move. We're going to go back to fundamentals. We're going to go back to the trading, the moving average, the trading average, and the price. As you guys have seen here, right? We had the Trump pump, and then everything has been cooling off since the Trump pump. But now a lot of this money that from the Trump pump moved into meme coins and Solana and all of that. Well, it's drained from there. And so what is it going back into, or what is it going to go into next? Or is it just going to sit on the sideline? Personally, I think we're going to see the flow back into the fundamentals, which is Bitcoin, Ethereum, and some of the top 50 coins as well. And some of the things that we're going to be talking about towards the end of this video are going to further explain that. I'm trying to do this in an order that can make this all make sense, because a lot of other channels are just saying, oh my God, Hyperliquid going down. Was there manipulation? It's like, yeah, but there's other things to think about, right? I don't think anybody on my channel is trading jelly, or even using Hyperliquid for that matter, right? Which tells me this is not something that is low level. This is institutional level manipulation. Why are they doing this? Are they trying to take down a competitor? Are they trying to show that there's a thinly traded market? Maybe it's not even the exchanges. Maybe this is just a whale. But then why would a whale want to take down the protocol, right? And so it's very confusing, but it's confusing by design, right? Because nobody knows what's going on, and then the whales make all the money. This is why you have to be ahead of all this nonsense. So now they're saying Hyperliquid ditched Jelly Jelly and profited $700,000 as this whale gambit backfired. And so effectively, Hyperliquid posted this. They said after suspicious activity, the validator set convened and voted to delist Jelly Perps. Look on Chain, interestingly enough, said the funds used to open the Jelly Jelly positions on Hyperliquid, right? These large shorts and large longs were withdrawn from OKX and from Binance. And so this is where a lot of people are believing that the exchanges were actually manipulating the market. And again, why would they manipulate like such a low volume, low market cap coin? I don't know. Maybe there's other stuff going on. Maybe it's not even the exchanges, right? But people said, did Binance enable Jelly Jelly leverage trading against Hyperliquid? Well, the answer is yes. I mean, right after the situation, Binance will offer perps listed for Jelly Jelly. And this user said they've declared war against Hyperliquid based on the announcement, right? And then later in the day, they listed Jelly Jelly on Binance futures as well. Again, more derivative markets. Now, if we go to the Jelly Jelly coin here and we click markets, it doesn't even look like it's listed on Binance. So again, what Binance effectively did here was they listed this coin in perpetuals or derivative markets, but they didn't list the underlying asset. And again, based on what happened with FTX in 2022 or 2023, I don't remember what it was, but one of those years, I think it was 2022, we found out that all the perpetual futures contracts, that we saw listed were basically just to manipulate the price. Now, some people are very confused at this point and saying, Cryptoviser, I still have no idea what the hell's going on. Well, Gabriel Haynes, many of you guys know him from X or Twitter. He does these funny parody rants, but he also tells you what's going on. So we're going to listen and watch. Hopefully the volume is not too loud, but this is Gabriel. Go follow him on X, and let's listen in.
Jelly and the Hyperliquid.
Whoa. That was very, very loud. We're going to go half volume. So if you're wearing headphones, which I am, be ready.
Jelly and the Hyperliquid. Jelly Jelly was created by Sam Lesithan. He was pumping up his Web 2 company with a Web 3 coin. It was a fucking scam, so people are shorting it to zero. Everyone on Hyperliquid shorting. They're making the big bucks. But then a whale's like, oh, I can short this shit. But then transfer the risk to the HLP, because for every long, there is a short, and for every short, there is a long, and in Hyperliquid, that is the backing of the HLP. So this man puts a 6 million notional short on a 20 million fucking coin. Then off-chain, he starts buying. The coin's pumping up. He's pumping up. He gets liquidated on Hyperliquid. Where does that short go? It goes to the HLP, and the HLP, they gotta eat that fucking Jelly Jelly for breakfast. They eat that loss for fucking breakfast. And now, guess what? The HLP is fucked. The whale fucked Hyperliquid out of their fucking money. And it's actually BNB. It's CZ. He fucked them. He's gonna launch his own perp chain. And he sent you the fucking zero. Hyperliquid.
So, if you've never seen Gabriel, well, now you have. This is, he's been doing this for years now on X. He should probably go all over to YouTube to actually make money off of it. But either way, that was a more simplified explanation. Go just rewind this video a few minutes to actually 1 minute, and you'll be able to see. But yeah, this is for me as an analyst of the markets, and I think as a fairly conservative investor in the crypto space, I think that all of this nonsense in the meme coin space just further solidifies. I don't care how low these coins go, these top 50 coins, they're going much, much higher, right? If they can be extracting $100 million from an Argentina coin that the president didn't even really know anything about, and just extract $100 million on day one, yeah, all of that money is going to be flowing right back to the other coins. And that brings us to GameStop. GameStop is going to be buying when somebody else is selling, and it's not going to be me, but maybe at 200,000, 300,000, maybe. But anyway, we heard, I think in yesterday's video or the day before, we talked about GameStop approving a vote that is going to allow the company to hold Bitcoin on their balance sheet, very similar to MicroStrategy. Well, now they're following MicroStrategy's strategy even further. And by the way, don't forget to give this video an absolutely free thumbs up. Hit the subscribe button. Thanks to all of our channel members and everybody who supports the channel regularly. GameStop files to raise $1.3 billion for Bitcoin purchases. And they're going to be raising this through a proposed private offering of $1.3 billion of convertible senior notes. Effectively, it's just basically taking out debt, and the person gets a note, and they can convert this into a share of the stock at a certain point in the future, or get paid a certain amount. This is the exact strategy that MicroStrategy has been implementing for a few years now, and here's the deal. MicroStrategy was a company that was just a software company. They were kind of like middle of the road, right? Not bad, but they weren't at the level that there are now, right? As the elite company that is the first company and the only company that one of the largest holders of Bitcoin in the world, right? So they completely kind of rebranded and re-imaged what their company is, from a software business to a software business and a Bitcoin business, where Bitcoin is really the main business. But anyway, that's what happened. GameStop is now in a very similar situation because GameStop, their stores are closing, their stores are failing, their business model is no longer effective. They are the blockbuster of this time period that we're in. They literally are the blockbuster. And so, their company has to figure things out. Do they go down as many companies go down? Or are they going to kind of re-switch? I just found out the other day that Wayfair is effectively Sears. So most people think Sears just kind of disappeared. Nope. Sears is Wayfair. At least that's what somebody told me. And I was like, my jaw hit the floor. I was like, wow, very, very smart. So yeah, we're going to see this. And I think that GameStop is looking at it like they have money, they have cash, because remember, when the stock was going up, they were selling shares on the market to raise cash. So why not put some of that cash to work and buy Bitcoin and maybe become the next MicroStrategy, where their business model becomes more of a Bitcoin holding company than a retail brick and mortar retailer. It is a very interesting kind of time frame for GameStop and also for MicroStrategy as well. And we're now hearing over 400 South Korean officials disclose $9.8 million in crypto holdings, over 20% of South Korean public officials who disclose their assets held cryptos, either Bitcoin, Ether, XRP, and Dogecoin. And so we're seeing kind of like the shift, and we're starting to see it in the US as well, right? The presidential Trump World Liberty Finance. I mean, Cantor Fitzgerald is Howard Lutnick, who's the Commerce Secretary. That's his company. All very, very pro crypto. And now we're hearing, following a crypto roundtable, SEC Commissioner Peirce hints at the direction the SEC is going. So last week, the SEC held its first crypto roundtable. During a speech after that, Commissioner Hester Peirce discussed some of the takeaways from the event. One was the need for the commission to consider crypto transactions separately from assets. She said, quote, many crypto assets themselves are not securities, but primary offerings of crypto assets for capital raising purposes are securities transactions. Accordingly, staff is open to inquiries about how to conduct such offerings as either registered or exempt transactions, and the task force welcomes well-reasoned requests for no action letters or exemptive relief. Effectively, what she's saying here is crypto are not securities. Bottom line. I mean, that's a very big statement, especially after years and years and years of just the fucking not being clear about anything, right? Gary Gensler, oh, we're very clear. Okay, so is it a security? Well, you'd have to look at our previous statements and look at the Howey test. Okay, let's look at the Howey test. Is it a security? Well, we have to, like, he can't even answer a question. Anyway, so yeah, we have clarity. Crypto are not securities, but the offerings, right? The initial fundraise, or ICO as they call it, that could be a securities transaction. But Commissioner Pierce is also saying that you can request registration or ask for an exemption where they will not take any action on the actual crypto raise, whether it happened in the past or whatever the situation is. She believes that the crypto sector raises many questions that highlight the need to reevaluate existing regulations. She noted numerous regulators who might play a role in regulating digital assets and outlined several ways that Congress can make those lines clearer. On one example of crossover between jurisdictions split between different agencies is that if a crypto exchange primarily trades commodities, but a few assets raised funds like investment contracts under SEC exemption, the entire exchange could fall into the CFTC's jurisdiction, provided none of the assets themselves are considered securities. And so obviously they're thinking about different things. They probably are talking with the exchanges and the participants in the ecosystem as well to get their feedback about, what the path forward should be. And we're seeing a lot happening very quick, and I think that we're going to continue to see this. Senate sends the IRS crypto rule repeal to the White House. Now, a lot of people were not even aware of this, and I would say it wouldn't directly affect most users, but it is important for the industry in my view. This is a broker rule update. Has its origins from the infrastructure bill a few years back. Industry representatives said that the language was too broad and would include DeFi applications that have no capacity to report. Effectively, the Treasury kind of got this passed so that if you were a DEX, decentralized exchange, any transaction that takes place on the DEX, you have to report, the buyer, the seller, all the trading info, and this is not known in a DeFi ecosystem. The services traders use to move their funds from on-chain to their bank accounts provide visibility of profits and losses for tax purposes. That's really what they were going after, it seemed, like the taxing. But it's true, right? The industry has effectively captured all of the on and off ramps, right? So effectively, if they're worried about the money that people are making in crypto, right, and going into dollars, well, USDC is regulated, USDT is regulated, and they probably have some type of reporting requirements. I would imagine, because they're connected with the dollar. Like it's not a crypto; it's a stable. It's essentially a stable coin. And they also have all the exchanges, right? So if you want to get cash, you have to get that money onto an exchange to get it to a bank. So that is that checkpoint to be able to identify profits that would be due for taxes. But again, they create all of these verticals, right, to just collect more, and then you have to pay more to then find ways to collect more instead of just like, just a flat tax on everything. Like personally, what they're talking about with tariffs, if they eliminate income tax and most taxes and just implement a sales tax across the board, I think this would be a much better deal. I mean, personally, when I go to a store or a restaurant and they charge me tax, is that really going to the government as a sales tax? Like, are they really reporting that full amount? So, we're taxed everywhere for everything, double, triple, quadruple tax, right? And so, like, if I'm a business owner, I'm taxed on the income, and then I pay you, and you get taxed on that. And then you go buy something from the store, and you get taxed on that. And then the person who you bought it from gets taxed on that, right? I mean, it's like a form of inflation or an inflationary version of how the money just is not worth anything at some point, right? And so I do think that kind of a flat tax on everything would be probably the fair and easy way to do things. We may pay a little bit more for X, but I mean, how often, like they're taxing cars, right? How often do you buy a car, right? And you could buy a domestic car, you could buy a used car, but if you're buying a new car, right? Yeah, it may be a little bit more, but you're not paying income tax anymore, right? Florida's talking about eliminating the property tax. First of all, I don't know how exactly that would work because they don't have an income tax. So how are they going to pay for things if they don't have an income or a property tax? Good question. But yeah, you guys kind of get it. There is a lot happening in the financial world, a lot happening in the financial space. They're calling it a detox period from the previous administration and the previous economy. from that administration. I don't know. I mean, I'm still very bullish on this market. I I get a little worried when I see things about like hyper liquid and manipulation going on and this perpetual futures being blatantly used to manipulate the market. Because what is this going to lead to? It's going to lead to more perpetual futures contracts being manipulated, more coins being manipulated. And the thing is, if they're moving just based on short term like market dynamics, like a short here and then I'm buying on the market and then a long and then I'm selling on the market, those are very short term plays and those are not going to have an effect on the long term, but it could have an effect on the short term and could also affect the fundamental coins because all the money is still being used for this nonsense trading and manipulation. It's also an indicator people are feeling the pain from the market dropping so much, right? And probably people not taking profits, people buying at the top. I mean, even MicroStrategy bought at the top of the market. So yeah, we're gonna have to kind of monitor. Obviously, I'm gonna keep you guys up to date right here on the channel. So make sure you guys are subscribed. Give the video a free thumbs up, and I will see you when I see you. Invest responsibly and crypto on.